So I just bought a new house for my family. What's going on, team? It's Ricky with Tactile Solutions. I've been keeping it a secret because I don't really like to talk about things when it's not officially closed. And as of yesterday, we officially closed on a new property that I bought for myself and my new family, right? So we have Remy, she's 7 months old. And this house is nice. My other previous house was nice, but we wanted something that was a little bit more ideal. We wanted a little bit more land. So very grateful that we were able to find a deal. And in this video, I actually wanted to talk about how I was able to negotiate over $300,000 off of the original ask price. And yes, I know not everyone might agree with me. Maybe they might think that the way that I do things was kind of aggressive. At the end of the day, I was looking for a property for my family, and I wanted to put us in a safe position. I made a bunch of offers, so very quickly, I was looking for a house anywhere from about $1 million to $2 million. That was kind of the budget that I wanted to stay around. I wanted something that was over 4,000 square feet, that sat in about around half an acre or more. And this thing just met all of our criteria. So this house was originally posted for 1.6 million, and it was on market for over 40 days. So the whole reason I'm sharing this with you is because I hope that you can use it to be able to leverage for you not to overpay. So if I can save you a couple $1,000s, maybe tens of thousands, if not hundreds of thousands, just with the simple things that I'm going to show you in this video, I think that, at that point, I hope that I can earn your thumbs up on this video and maybe subscribe. So I want to share with you why I began to be a lot more aggressive with my offers. Is first off, a couple of months ago, maybe a year ago, right, when interest rates were really low and everyone and their mother were paying above ask price for every property, right? It was definitely a seller's market. This is where pretty much sellers dominate and control everything, right? There's offers that go above ask, they waive all contingencies, and it was impossible to compete, especially with investors that, just made it very ideal for the seller. Now, that's definitely not the case. I want to share 3 reasons with you. First off, interest rates are double of what they were last year. So let me actually just share this with you very quickly. I mean, we can look at where we were last year, right around 2 to 3%. If we look at where we are now, we're nearly at that 6% on average, 5.5 to 6%. You might be asking, well, Ricky, what does that actually do to your mortgage payment? So let's go ahead and actually calculate it. Why not just calculate it and give you guys a better understanding of what interest rates and how it influences your payment. So $500,000 is the median price of a home in the United States. At the current interest rate with the 30-year fixed, your monthly mortgage payment would be almost $3,300 a month. Last year, right, when interest rates were, let's even do 3.5%, right, because this is kind of high. So let's do 3.5%. Your mortgage payment would be over $1,000 cheaper. Now, what is that equivalent to? I mean, that at that point is nearly 50% more of what your mortgage payment would have been last year. And that's significant. You need to understand that, right? Because for almost $2,300 last year, you could take out that $500,000 loan, and that's what you would be able to afford, $2,300 a month. Do you know what your payment or the purchase price of your house would have to be at current interest rates? So let's say 6.5% is the current interest rate. So let's do 6.5%. Your loan amount, if I'm not mistaken, would have to be around $350,000, and your mortgage would be around the same. So that means that you would have to reduce, if you wanted to buy a house for $500,000 and you wanted your mortgage payment to be the same that it was last year, you would have to reduce your purchase price by $150,000, $350,000 from $500,000 and $2,200 a month. That's what you would have been able to afford last year. Now with that $2,200 a month with current interest rate, you have to reduce it by $150,000. That's significant. So you need to understand that. So anytime, I want to make sure you're aware of this. Anytime that a real estate agent or someone that is interested in selling you their house, if they try to convince you that, hey, like last year, these properties were selling for this dollar amount. Make them aware. Don't give them your opinion. Opinions don't matter. Share with them the numbers. Just be like, okay, yeah, last year, $500,000, I could have afforded this for $2,200 a month. But now with current interest rates, it's $1,000 more a month. But do the math, it's 50% more. That means I would have to pay $350,000, $150,000 less than what you currently are asking for me to have that same mortgage payment that I would have, been at last year. The reason I express this is because that's what I did. When that seller was presenting, there's comps, meaning comparables of properties that sold earlier this year for 1.6, 1.7 million. A house around the corner sold for 1.9 million. Sure, that's nice. I mean, I would do that all day if interest rates were 3%. My mortgage payment now would be significantly more at 6 or 6.5%. And they need to understand that we are no longer in that market. The second thing is, one thing that I want to show you very quickly is the average days on market. Now, this is just in my area, but you can do this own research yourself. Go to movado.com and do market trends. So right now there's 1,400 active listings. This is the amount of new homes, open houses, and then these are the numbers of price reduced properties, 651, nearly half of every property listed, right? Because we have to remove 123 because those are just new homes. 650 properties that are listed have gone through a price reduction. You know how rare it was to go through a price reduction last year? Demand was so high last year because interest rates were so low. There was no, price reduced unless you had an unbelievably high price. But on average, every property was selling for above ask. You didn't have to reduce your price. You knew that you would get above what you were asking. Now that's not the case. Do you want to know the difference in the average days on market? Right now, the average days on market is right around 45, 35 to 45. If I'm not mistaken. Yeah, right now we're at 45. We were previously at 35. For the month of July, August, we were at 45. Think about that. A month and a half is what the average property is posted on market for. You know what it was last year? 12 days on average. 12 days to now 45 days. Think about that. That is 3 times more of what we are experiencing. So it takes 3 times longer to now sell a house than what it was last year. That's important for the seller to know. Demand is low for real estate right now because of interest rates. So what I began to do is, I love this data. This helped me leverage. It wasn't my opinion. It wasn't what I hoped. It was what it was actually telling me, what the market was telling me. And it's very easy for everyone to see this. That when this house was posted, the first thing that I was looking is, I didn't want to overpay for a property. I wanted to get a good deal. I knew that later down the road, the thing that you have to understand is that mortgage rates will eventually drop. So can you tolerate the time with these higher interest rates to be able to, make those payments? But what you must know is that, you could always refinance 1 or 2 years from now when rates are back maybe at 4 or 3%. You need to understand that, right? But you want to leverage this. You want to be like, hey, I need my payment to be lower. So I need to offer way below. You're trying to give me a comparable of earlier this year, but we're so different now, right? So what I began to do is I looked for properties that were posted for 30 days, 40 days, 50 days, or 60 days, really 40 days or more. Because I knew at this point, they've had the property on market for a while, and this is when they begin to get a little bit more distressed. Not all of them, but a little bit more, right? They've been on market for a while. They've either gone through a couple of price reductions, and you never know what this person is willing to accept, right? And this is where I really began to lowball people. I've offered people that had their house posted for 2.4 million. I offered 1.7 million. I have no shame. I'm a cash buyer. One out of every 5 properties on the market right now are falling out of contract, and that's only going to increase, right? People are pulling out of contract. They're about to close and they pull out, right? This has happened to some of the flips that we have, and it's frustrating. A series of open houses, if they're still living in the property, they have to leave as people come and walk it. It's frustrating. It's annoying, right? To be able to sell a house or try to sell a house and it not sell. So you have to understand that, last year, as a cash buyer, you had no leverage. This year, with the days on market, with the amount of properties that are falling out of contract, with the lack of demand, cash now has leverage. You make it easier for them. I closed on this property in 2 weeks. You can take out a hard money loan if you don't have cash. Now, this is one thing that you must understand. This is the whole purpose of this. We talked about the average days on market. I would like it to be, my criteria was I was looking for a property that was posted for more than 40 days. I wanted them to be a little bit more distressed. I wanted to see if they went through any price drops, because if they've gone through one price drop, I figured that they would go through maybe another one, right? So when this house was posted for 1.6 million, I had no shame. I offered them the 1.2 million. I'm here to build myself margin, right? And I sent out these 20 to 25% offers, cash offers below ask. I think I sent about 5 to 6, probably a total of 10 that were informal, meaning that like I spoke to the seller's real estate agent and I'm like, hey, would they accept 1.2 million, 1.1 million, 1 million, and they have it posted for 1.5? Like, whoa, no way, right? At the end of the day, I mean, if they say that they will entertain it or I'll present it to my seller, great, that's all I needed. And I sent out about 5 of those formal offers, and this last one got accepted. And think about it. People might say, wow, Ricky, that's very shameful. Why are you, asking to buy someone's house 20,000 or 20% below their ask? I don't care. I don't know their situation. They might have a bunch of FU money and they don't care for the difference, right? I'm here to make offers. It's a numbers game to me. I want to put my family in a good position. I don't care what you're asking. I know that it's obviously not selling if it's been posted for 40 days. Interest rates, even in the start of September, interest rates began to rise. This is only going to slow down the real estate market. Make the seller and the seller agent aware. They need to stop being in their head that this is a seller's market. No, we are transitioning into a buyer's market. Make an offer. I don't care what your ask price is. Well, we're asking 1.5. I don't care. I'm offering you 1 million. You've been posted on market for 60 days. That was my approach with every single property I went to go see. I would point out everything that I didn't like about the property. I would point out what would need to be updated, remodeled, fixed, how much it would cost. And guess what? Even after I got this property for about 15 to 20% below their original ask price, even during the inspection period, I asked for seller's credits. I said that there are a series of things that were broken or that I would need to be repaired that were brought up by the inspector, and I want a $10,000, $20,000, $30,000, $40,000 credit. I do not care. You should not care. You are here to make offers. You are here to build yourself margin. So now, right, I bought the property. I closed on it yesterday. Now we start the remodel process. I can update it. I can do whatever it is that I want. But your job is to put yourself and your family in the best position. Your job is to shoot and make offers that are of value to you. I don't care about their situation, right? It's not, they can just say no. And respectfully, I will respect the no. I'm not here to convince you to sell me your house. I will present to you everything that I know, why I think it's only worth 20% or 25%. Shoot, I don't care, 40% less of what you're asking. And if you say no, cool. If you accept it, then great. I'll pay for it, right? That is the approach that I feel like everyone should have going into this market. Make offers that are of value to you, not based or presented, and that are of value to the actual seller's agent. We are now seeing the transition from seller's market to buyer's market. And I know if you present them all of this data, they can say whatever they want. Oh, I mean, demand is still high. No, it's not. And demand is only going to slow down. There's uncertainty. Interest rates are rising. The days on market are rising. Show them all of this. I want you to use all of these things. I want you to show them how interest rates have been rising, the difference of your mortgage payment, why it's not worth what it was worth before. Talking about in the start of September that this was just announced, that we are only going to see mortgage interest rates continue to rise. I want you to show them the average days on market. I want you to see the number of price reductions. Everything. I want you to show them everything. Show them the mortgage calculator. You might be like, well, they might not care. Then at that point, again, go to another one, right? And lowball someone else. This is the beautiful thing about the market right now. This is where you can really build yourself good margin if you know what to present and what to leverage. So I just wanted to share with you guys my experience on buying this property $300,000 below the original ask. I hope that you guys found this video of value. I don't really film too many real estate videos, but if you have any questions or any suggestions, I'd love to film more. So again, friendly reminder, if you guys have any deals in the Arizona area, I am a cash buyer. If you know a friend or family member that's interested in selling their house, I do not care. I will pay you a finder's fee, a couple $1,000s or a percentage of our net profits if we end up acquiring the property. Just send it to me via Instagram, and that's that third link down below. I really do appreciate you guys' time. I hope that earned a thumbs up. I wish you guys an amazing Labor Day weekend. And friendly reminder, for Learn, Plan, Profit 2.0, we are running a Labor Day sale to $150 off, our biggest sale ever, and it's the second link in the description of this video, and it will end after the Labor Day weekend is over. So I appreciate you guys' time. Like always, let's make sure that we end the year on a green note. Take it easy, team.